Good morning, everyone, and welcome to my January 2025 real estate market trends. We're going to be covering mortgage rates, the underlying economy, economic insights, and as always, I would love to have interaction from those of you joining us. If you have any questions, it's going to be a little bit different this time. Live streaming for the first time, we're not going to be able to have live interaction as far as just communication and conversation, but you can enter questions into the comments at any point, and I'll be able to answer that. Hopefully, we may have a few glitches. This is the first time we are live streaming instead of carrying this over Zoom. So I'm going to go ahead and get started momentarily. If you have any questions or anything in particular you would like to cover right off the bat, go ahead and drop that in the comments right now. We're going to be following the same format that we usually do. We're going to start looking at mortgage rates and the underlying economy and the reasons for where mortgage rates are right now. And for quite a while, mortgage rates are the number one thing that are driving what's happening in the real estate market overall, but also specifically here in the DMV with the higher mortgage rates, at least compared to recent history. We have had fewer real estate transactions. We've had limited inventory, lower buyer demand, still a vibrant market, but lower than recent years. So we're going to start with that. I'm going to go from there. We're going to rehash what I covered 2 months ago. We're just going to touch on briefly now that we have a new administration. The new president was inaugurated this past Monday, and there are plans for the new administration will have a little bit of an impact in the real estate market. At least that's my opinion. So I'm just going to touch on that once again. Then we're going to go into DMV market data. We're going to look at the most recently reported month from Bright MLS. That is December of 2024. Then we're going to go up to 30,000 feet, take a look at the broader view, just a quick look at annual and quarterly numbers, also monthly for the past couple of years, just see where the broad trends are headed. Then we're going to zoom back into the District of Columbia, look at some DC specific information and data. And the reason I'm doing that is because the DC real estate market is a little bit different from the surrounding markets and has been pretty much since the pandemic settled in. You've had a lot more remote working and some population migration. Things are a little bit different in the district than they were pre-pandemic on the real estate front. Then we're going to close it out by looking at the most recently reported week from Bright MLS. That is the week that ended this past Sunday. All right, let's go ahead and get started. Okay, first, I'm going to cover, for those of you who have joined every month, you saw that I added this last month. And it's basically, I just want to make clear for those of you who maybe don't follow the economic data as closely as I do or understand the connection to mortgage rates, which is perfectly fine. There's a lot going into the economy and mortgage rates, and it's fairly complex. But I wanted to present it in just a more easily digestible way of why I cover the things I do and how they have an effect on mortgage rates. And this flow chart kind of briefly summarizes what that is. And you look at things that have a major influence into the bond and mortgage-backed securities market, which greatly influence, mostly influence what mortgage rates are, and that is Federal Reserve policy and the overall economy. So the overall economy, just when you look at what's going on when you talk about the economy or gross domestic product, that is largely employment, inflation, retail sales, manufacturing output, and industrial production, which is why I cover that. And then that it influences Federal Reserve policy, and Federal Reserve policy as it relates to us. And this is largely the federal funds rate, which is what people are talking about when they're talking about the Federal Reserve raising or lowering rates. Then they also have quantitative tightening or QT and quantitative easing QE. And that's where they either kind of inject money into the economy or pull some money out. Go into a little more detail in this slide here. Not going to cover it in this level of detail this morning, but when I send out the deck, you can take a closer look at this. Now, I expect a few hiccups this morning on the live stream. One of these, okay, I see that the comments are not coming up on the screen, but I see them separately. Okay, I'll just pop into that occasionally. I don't know. It doesn't appear that the chat is automatically coming up onto the screen, so I'll just keep an eye on that, and I will highlight those if I'm going to be answering questions. I see that Virginia is on here, and I can see the chat. I'm not sure. Can somebody mention? So Virginia has a good morning and try in the chat, and I have the setting what I think allows others to see that. Can somebody pop in the comments and let me know if you are seeing that in the live stream? Okay, so forced audience participation. Where are mortgage rates at right now? Where do we think mortgage rates are at? And okay, Tom, you can see the comments in the chat. All right, wonderful. So where are mortgage rates at? I'm can no longer hear your audio, unfortunately, but just pop in the chat. Where do we think they're at compared to where they were when we met last month? And when I talk about mortgage rates, I just refer to what has been reported by Mortgage News Daily, and those are released every day. They use just kind of a standard metric. Obviously, those rates are going to vary for your clients. Okay, Tom Kavanaugh with Fulcrum Residential is saying 7.2, and yeah, that's right around what we are seeing. The as of last night, Mortgage News Daily was reporting 7.08 on the 30-year fixed, 15-year fixed, a little lower than that, about 6.5. Jumbo coming in 7.25. ARMs, little lower, and also lower, 6.5 or so on FHA and VA. These are all right around where they were when we met same time last month, about 3 to 10 basis points of the level we were at our last session. But there's been a fair amount of volatility, and you can see that's just coming here. This is the past month, just kind of popped up. Was mortgage rates were up a little bit higher recently and have dropped back down a little higher. Yep, Shelly, same thing. Yep, 7+. That's what we're seeing. Um, and I would love to, before we move on, get some real world rates that people are seeing with their clients. If anyone has a client who's locked a rate in the past week, love to hear some real world rates for both fee simple, detached homes and row homes, and also condos. Condo rates tend to be a little bit higher than fee simple. Has anyone had a client lock? I know some of us have had clients lock in the past week. Real world rates, pretty please. Okay, while I'm waiting for that, I will share. I think as many of you know, can you see this? I am a brand new daddy. I'm a little girl, Zara Marie. I call her Lil Mar. She has joined us, was kicking back in the hospital for a little bit, but is now back home for a couple of days. So if I look sleep deprived and sound mildly incoherent, uh, then I probably am. But doing my best here, try to be as coherent and present this in a logical and orderly fashion. Okay, all right, we're gonna go ahead and move on. We're usually if the um, if the broadcast rates are right around 7, we tend to have clients locking. You know, you get some clients with preferred terms in really solid financial shape might be able to get fee simple rates as low as 6.5, and then condos maybe with clients having not quite as strong financially could be as high as 7.5 or so. Okay, now we're going to get to the underlying factors, inflation and jobs. What do people think? Where are we at there? Where most recently reported inflation numbers, were they higher than they had been, lower than they had been? What's the job market looking like? A little more vibrant, less vibrant? What do people think? And as always, this is forced audience participation. I will not move on until I get at least one response on each question. Stable. Yep, Tom. Inflation is relatively stable, about the same, and jobs came in a little hotter than expected. So you can see here that the December 2024 inflation numbers, these are seasonally adjusted. It was up by 0.4%. Energy comprised a lot of this monthly increase. Energy comprised about 40% of the monthly increase. This is the highest month-over-month increase in 19 months. Um, but the market reacted more to the 0.2% increase in core CPI, in core inflation, and that's the smallest gain since July, and less than the 0.3 expected. And I talk a lot about when by the time these numbers are released, the market has already incorporated what they expect to happen. So whenever these major metrics are released, if they match expectations, you generally won't see much movement in mortgage rates at that time because the market has already incorporated their expectations. The time you will see movement usually is when these numbers don't match expectations. And here you have a little bit of a mixed bag, whereas the actual monthly increase was a little higher than was expected, but the core rate was lower. And generally, it's like if inflation is higher than expected, that's not going to be great for mortgage rates. If it's lower than expected, that is going to be good for mortgage rates. So this kind of canceled itself out just a little bit in these conflicting numbers. But like I said, the market paid more attention to what these core numbers are, which were a little bit better than expected. Annual inflation, this is the all items index for the most recent 12 months that was reported. That came in at 2.9. That's the highest rate since July. So that was a little bit higher, but once again, core rate a little bit better, and that's what the market keyed in on. The jobs, on the other hand, the job market continues to be most months the job market has been more robust than expected, and we added 256,000 jobs in December, non-farm payroll jobs, and these jobs numbers were much higher than expected. It's the biggest gain since March, and a lot higher than the 155,000 that the market expected to be added. These gains came largely, they were driven by healthcare, almost 50,000 jobs added, retail trade, a little bit lower, 43,000, and government added 33,000 jobs. So the job market continues to be robust. Unemployment rate is 4.1, dropped tenth of a percent. Unemployment rate has either been 4.1 or 4.2 for the past 7 months. Now touching on Federal Reserve Open Market Committee. When do they meet next? Anybody know? I'll just jump ahead. The Federal Reserve, the Open Market Committee, they are meeting next on January 28th and January 29th. So coming up pretty soon. The expectations are that there will not be a rate cut at this January meeting. That's the market consensus, the strong jobs report, and the changes that are going to be happening with the new administration, and the expectations of how they'll affect the economy, among other factors, have pretty much shut the door on any interest rate cut at this January meeting, and has reduced the chance of a rate cut at the March meeting. So federal funds rate right now is the range is 4.25 to 4.5 following that rate cut in December. And what this is, if for those of you who are not familiar, the federal funds rate is the rate that is charged for banks to borrow from each other after the close of business overnight lending. So as mentioned, we have the next Federal Reserve meeting coming up shortly in just a few days, January 28th and 29th. Then the next meeting after that is March 18th and 19th. 10-year Treasury, I'm going to pull up what it's being reported at right now, but as of last night, it was 4.614. That is right about the same as it was last month. Right now, I'm seeing 4.631, so just a tad higher since last night. It jumped as high From mid-month last month to now, it had jumped as high as around 473, almost 48, but has come back down again. Okay, retail sales. So the advanced estimate that came out reporting last month's retail sales was reflected 0.4% increase. So this was below expectations. The market expected 0.5% increase. But the November figure was revised upward. So November had been reported as 0.7% increase. That was revised up to 0.8%. And so that kind of countered the little bit lower than expected numbers. And there was also a year over year 3.9% rise compared to December of 2023. And this bet beat the rough expectations of the market of 2.5 to 3.5%. So retail sales still a little more robust than expected. Going into manufacturing output, this is one of the stronger months for manufacturing output that we've seen in quite a while. And these were both boosted by a gain in output from aircraft parts and aircrafts and parts. So, following the end of the Boeing strike, and this is usually what we see. If there's a major strike in anything connected to manufacturing, you will see that take a hit in the following months. And then once the strike is over, you'll see a little bit of catch up with that manufacturing output. All right, moving on to GDP, kind of taking all of this stuff, putting it together. That is the economy, that is gross domestic product. Since we last met, the Q3 third estimate, the final estimate of GDP for Q3 was released, and that was those numbers were 3.1%. So 3.1% is a robust economy that is humming along fairly well, and that's why we're seeing these mortgage rates still stay high. There had been expected a recession at some point over the past couple of years. Expectations have been that the economy would slow down. We would probably see a mild recession at some point. Now it's looking at like that's just not going to happen anytime soon. We're just seeing, quarter after quarter of this relatively strong economy just humming along. The Q4 advanced estimate is going to be coming out in about a week. Those numbers will be released on January 30th. This is the Atlanta Now GDP model, which I always just touch on ever so briefly. Right now, they are estimating a Q4 GDP at 3%. This is down a little bit. When we met last month, towards end of December, they were projecting a Q4 GDP of 3.2%. Now it's 3%, but 3% is still a good number. It's still a healthy, strong economy. So we're not seeing any projections that the economy is going to be slowing down anytime soon. Just want to note, as I have here in the slide, that the Federal Reserve of Atlanta GDP Now model tends to be a little bit higher than other blue chip models for GDP, but all of them are projecting a healthy, robust economy. Okay, now I'm heading back into the impact of the 2024 presidential election and the discussed administration policies and policy changes. Cover this in more detail before. I'm just going to touch on it ever so briefly before moving on. You can take a closer look in the slides. Um, it's impossible to say right now exactly what the impact will be of the new administration because no one knows exactly what will happen. There's a lot that's been talked about, but the government is large. There are multiple branches of government. It's tough to, even with executive orders. Obviously, you can only control so much, and so there's nobody knows exactly if out of what has been discussed, how much will be implemented. But the consensus is that happens, the economy is probably going to be a little more robust than it would have been otherwise, and inflation is probably going to be a little bit hotter than it would have been otherwise. And all of this is leading to wherever mortgage rates will end up at, and there's going to be a lot of volatility in mortgage rates in the near term. Wherever they're at, it's going to be a little higher than they would have been otherwise. And just briefly, this is because tariffs. A lot of talk about tariffs. Who knows if the level of tariffs that have been discussed will be fully implemented, but there will at least be some level of tariffs. The expectations are with China in particular, and that will impact inflation. And that will make inflation a little bit higher. Tax cuts likely lead to increased deficits, likely lead to increased yields on the 10-year Treasury, corresponding increase in mortgage rates. There's also been, immigration. If there is a mass deportation that covers labor workers, that'll cover construction workers. That will affect the market for home construction. It might constrain the ability of these builders to build at a level that matches their plans for the upcoming year. As I mentioned, the economy is expected to run a little bit hotter, and and the last thing is federal government size. There has been a discussion of paring back the federal government. That is easier said than done. If that happens, though, the uh, the joke here is that it will. Do I have it in the slide? Took it out of this one. But if there is a large scale decrease in the size of the federal government and federal government workers, that will result in a softer real estate market in DC. All right. Now we're going to take a look at what is happening in the DMV real estate market. So getting real estate specific here. What are people seeing out there? What are you, if you're following the market stats more closely, how's the market doing? Median days on market, closed sales. Where do we think we were at? How did we close 2024? This is again forced audience participation. Would love to hear some comments. What do we think? Did we close the year? Was it a strong close to the year? Did it just kind of end with a whimper? Were buyers cold, staying home, doing too much shopping for the holidays, not buying homes? What do we think happened? And so I'm also live streaming across multiple platforms. So I know I'm seeing the YouTube comments. If people are commenting on the other platforms and I'm not seeing it, my apologies. Please message me if you are commenting and it's not showing up here. Please message me and let me know so I can try to get that worked out in the future. All right. Shelly mentions closed 20% fewer homes than 2023. I think an extra zero popped in there. Believe we were about 2% lower than we were in 2023, but we ended the year pretty strong, and we're going to dig a little deeper into those numbers. We were on pace for a little bit lower numbers. We were on pace for 48,000 and change closed units in the DMV for 2024, and we ended up just a little bit above 49,000. All right, so we're going to take a closer look at just some of the key metrics here. So the median sales price for December was 590,000. This was up by over 6% year over year from December of 2023. This is the 19th straight month of year over year DMV price appreciation. So again, going back to, we all have buyer clients who are on the sidelines. They're waiting for mortgage rates to come down. And it really, the strongest, most valuable message we can share with them is that nobody really knows right now when mortgage rates are going to drop. We expect sometime before the end of 2025, mortgage rates will come down, probably in a somewhat meaningful way. They're going to be volatile in the short term. All expectations are they're going to be fairly volatile for the next 3 to 6 months at least. But you can always refinance when rates do drop. The one thing you can't do is make up for that lost equity or get some kind of discount when the sales price of your home has increased. Little different in DC proper. We're not seeing as much price appreciation. We're seeing price depreciation in some areas, but overall, in most areas of the DMV, we're just seeing this strong upward pricing pressure. And really, all that's happening if you wait to purchase is you're going to be paying a little bit more for your home, and your seller is going to be capturing that increase in equity, and you are not. So median days on market in December creeping up, kind of to be expected in the winter. Median days on market was 19. That was up 3 days from December of the prior year. Closed sales, going to what I was talking about how did we end the year? Did we end the year strong? Did we end the year soft? The closed sales for December were up by more than 25% from December of the prior year. And this was continuing a surge of buyer activity that we saw at the end of 2024. There was really in November and December, it was a lot stronger market relative to where it had been from what we would typically see. But going back to 2019 levels, and if anyone here is new joining us this month, I refer back to 2019 levels because that is basically the last normal year we had. 2020 was the pandemic. It was a little low. The market was skewed. Activity was shifted to different parts of the year. 2020, 2021, you had lower interest rates. You had kind of artificially increased buyer demand. And then we've had mortgage rates kind of drop up in a lower than normal market. So 2019 levels, kind of the most recent baseline benchmark. And even though we had a big jump in year over year closed sales for December, we were still only at 72%, so less than three quarters of 2019 levels. So new pendings, new under contracts for December, that was up a little bit from the prior year, 3.4% from December of 2023, and that was at about 80% of 2019 levels. Now taking just a closer look at active listings, new listings, and showings. So active listings are up about 15% year over year. Now, this is the 11th straight month of DMV-wide increases in inventory. We had a year of year over year declines in inventory, just less inventory, less inventory, less inventory. We are now almost at a year of consecutive increases, but still much lower than the levels we've seen historically, and that's probably going to remain the same until mortgage rates come down. You can see that these inventory levels, even though they've jumped up from what they were in 2023, it's still 64% of 2019 levels, less than two-thirds of 2019 levels, or actually right around two-thirds. My groggy math is not so great. Now going to new listings were down year over year. We saw less new properties come on the market this past December, and this is the lowest level of monthly new listings in more than 20 years. It's 62% of 2019 levels. We are just not seeing a lot of inventory that out there in most areas. When we take a closer look at the county and district breakdown, you're going to see it's a little different in DC, but most areas of the DMV, just very, very few low listings. Showings right about the same as where they were in December. But it's kind of interesting to note, kind of want to compare the showing level to the closed units level. So we're seeing that from the showing level, showings are right around the same as where they were December of 2024. You can see that here, but going back to closed sales, more than 25% higher. And so what that tells me, what that should tell you, is that the buyers that are out there are very serious. So not as many buyers out there looking, but the ones who are looking to buy. We have a lot of pent-up demand, and we've been talking about this for a while. People who have been waiting and waiting and waiting, and at some point just can't wait any longer. And so those buyers who are out there, you tend to have more interested buyers looking to write. So this is just a more detailed breakdown in some of these numbers. Not going to go into this right now, but when you get the deck, you can take a closer look. Now taking a peek at the county by county breakdown here. So closed sales up big pretty much everywhere, from 7 to 37.5%. Frederick County closed sales were up by more than a third year over year. Median sales price, we're seeing prices up pretty much everywhere in the DMV, even in DC this month. Median sales price were up in DC by about 5%, up everywhere except for Alexandria and Frederick. Frederick median sales price was down by about 8%, and Alexandria was down by 13%. Alexandria, don't put too much stock in these median sales prices. It's whenever I take a closer look, it's usually more due to the distribution of sale types for a given month, as far as the level of kind of higher value properties going on, or the distribution between that and condos. So it's Alexandria, still a vibrant market. Looking at the median days on market, so it's up everywhere as to be expected. In December, things usually take a little longer to get under contract, even when we're seeing increases in closed units. But so up everywhere except for Arlington, which is pretty much even, and down in Loudoun County. But as we've seen every single month, DC leads days on market for the region. They're about 43 days on market. That's up 10 days year over year and 16 more than the next highest. Now taking a peek at new pendings, new listings, and showings. So new pendings up big in Frederick by 27.5%, up by 9% in Fairfax, 7% in Loudoun, 6% in Montgomery County, up by 5% in Arlington. New pendings were down, however, in Prince George's County, DC, and Alexandria, and we will likely see that in the closed units numbers for the following month. New listings up big also in Frederick. We saw an increase in new listings year over year by about 7% in Frederick, up by a little bit in Fairfax, almost 2%. New listings were down everywhere else by between 2 and 10%, except for Alexandria. New listings were down by almost 19% in Alexandria. Showings, bit of a mixed bag. We talked about showings were up 1.4% year over year for the region within the various areas. Like I said, all over the place, kind of up by 20% in Frederick, up by 7% in Fairfax, but then down by almost 7% Prince George's. So just wherever you focus your business at, make sure you're looking, you're taking a peek at this local data, because there is some variance. We're not just one monolithic real estate market. Okay, now closing out the county comparison with a look at active listings and months of supply. Active listings are up big in Alexandria, DC, and Montgomery County. They're almost even in Arlington, and they are down by almost 16% in Loudoun County. So also a lot of differences in inventory levels year over year in these various areas. But the one thing that is consistent is, outside of DC, there is no meaningful supply anywhere. We're looking at 7/10 to 1.38 months of supply everywhere but DC. In order to be even like an equal market, people differ a little bit on what they consider to be an even market, where equilibrium is. 6 months is rough ballpark, but you need at least 4 to 6 months of inventory to be considered anywhere close to equilibrium. Higher than that for a buyer's market, nowhere close to that. Still a seller's market, strong seller's market, and that's just because of the low inventory. Except DC. DC, we're seeing inventory come down from where it has been, but there's still 3.5 months of inventory in DC. Taking a quick peek at home demand here, we are seeing that home demand has dropped from the prior month, which is to be expected heading into the holidays, but it is more robust than it was last December, up by about 4%. This is just a little chart showing the year over year comparison. This year is in orange. You can see that we are declining a little sharper than we did the prior year, but meeting up right around the same point. And then to put that into color, this is showing that throughout the area, demand is relatively soft. All right, now popping up and looking at where we closed out 2024. And so these were the numbers that I discussed. We ended up having 49,942 closed units in 2024. That was just a little bit higher than 48,950 in 2023. And the lowest numbers, those two years, these are the lowest numbers of closed sales we've had since 2008. And expectations are, I think Shelly mentioned in the chat, yep, we're expected to see a little more inventory come on the market in 2025, but nobody is expecting massive, meaningful changes. We're not going to see 60,000, 70,000, 80,000 transactions. It's probably going to be in the 50s. And as I said, the real estate market is going to be right around these levels until we have a meaningful decrease in mortgage rates. Excuse me. We are going to see this pent up demand, and the reason for the little bit of the increase, the pent up demand, people on the sidelines can only wait for so long. We're going to have some sellers who have been postponing selling, who can't wait any longer. We're going to have some buyers who've been postponing buying, who can't wait any longer. We're slowly seeing both of those trickle into the market, but you have a lot of people who are still holding out for lower rates, and they won't entirely come back until we see some meaningful decrease. This is an annual look. You can see that talking about the upward pricing pressure for 2024 overall, average sale price was up by almost 7% in the DMV. Median sales price was up by more than 6%. Already talked about the units sold. Days on market, looking about average of 3 weeks for the area, and average sales price to original list price is right around 100%. So overall, in the DMV, sellers are getting right about what they are asking. This is just a big picture look at quarterly data. And just want to mention, when I talked about this, is really, I like to look at this because this encapsulated and kind of makes obvious the stuff that you can already see if you're looking at this data more closely. But talking about, I mentioned that we closed the year strong, and this is why we ended up beating 2023 in closed units, and this is the clearest piece of data, in my opinion, that shows that. If you look at the fourth quarter for 2024, units sold were up by 16% over Q4 in 2023. So closed the year out much stronger than we did in 2023. This is the monthly data. Not going to focus on this, but you can take a quick peek on the deck. Okay, now we are going to take a closer look at the District of Columbia after a quick water and coffee break. And it's a little kind of bums me out. Excuse me. Kind of bums me out a little. I love the active conversation that we have had every month. I've been doing this, and just like the dialogue, the talking. I think so much of the value here comes from hearing what all of us are seeing on the ground with our clients. And I'm kind of missing that this month, since that's not possible with the multi-platform live stream. But please, please, please drop in the comments questions you might have, things you're seeing, something that you find relevant. Because if you're seeing something out there that you find important, or you're having some experience with your clients that you find to be relevant, then we'll probably find it relevant also. And I can pull all of this data, but the experiences we have, what we're seeing out there with our clients, from a level of whether it's multiple offer situations on properties, or being able to get a property with a buyer where you don't have to compete, or with your sellers, that level of thing, we can't pull the data like that. So there's a lot of information here in the collective that is just as valuable, if not more, than what we can get in this general data. So love to have the input. Thank you, Ty. I appreciate that. Okay, water and coffee break is almost over. Now we're going to take closer peek at the district. So these are all of these. I have data for the past 6 months, have it broken down. There'll be all property types in blue, detached homes is red, row homes is green, condos is orangish, yellowish. So these are the actual values. Closed sales in DC. You can see DC is also showing some buyer demand. There were increases in closed sales overall and for row homes and condos from the prior month. Taking a peek at the changes from year over year, we saw a 20% increase in DC in December of closed sales from the closed sales in 2023. And this was the case overall. And you can see there was also a jump among all property types. Detached homes sales were up by 37.5% from last December. Row home sales were up by almost 16% from last December. Condos were up by 18%. So DC still softer market than the general DMV, but we saw that it closed the year fairly strong. We saw price appreciation. We also saw increase in buyer demand there, and buyers going after properties. Now looking at new listings, these are the actual values. Expected seasonal decline. If Generally, if sellers can help it and they have a great property, they're not necessarily going to want to put it on the market in December around the holidays. So, seasonal declines as expected overall and among all property types from the levels in November. Now, if we look at the changes from the prior year, fee simple was down. We saw fewer fee simple new listings. Detached were down by a little over 2%. Row homes were down by a little over 7%. But condo listings were up by 6.6%. And I'm going to touch on condos in a little more detail in just a sec. Months of supply, actual supply is shrinking, what you would expect. There's a little less supply in the winter months, but we are still leading the DMV region in inventory. Okay, now looking at the year-over-year change, similar to last month, detached inventory is almost even year over year. Row home inventory is up by about 35%. Condo inventory is up by 57%. Now looking at the days on market, so the days on market actual expected seasonal jump. You're going to see pretty much every year, you're going to see a seasonal jump in days on market from November going into December. Detached days on market were at 32 days, a little over a month. Row homes are right around there, 35. Condos at 50. Now, if you've paid attention to nothing else but these last few slides and you are dealing with condos in DC, your takeaway is if you are listing DC condos right now, you really need to be setting proper expectations with your clients because condo inventory is very high. Condos are taking a while to sell, and it's just a bit challenging to sell condos in DC right now. Now, if you have an incredible condo, you can still get condos under contract in a week or less. I mean, just a wonderful property in a great location, everything kind of perfect at a good price. You can still get under contract relatively quickly. But if it doesn't check all of those boxes, it can sit for quite a bit. So it's just really important to set proper expectations when you are meeting with your listing clients and discussing the likely outcome of a condo listing in DC. Okay, now taking a look at days on market, the year-over-year change. So higher days on market than last year for detached and condos. Row homes were right around even. Median sales price to original list price. These are the actual numbers. So we basically maintain the ratio overall among all property types. Sales price to original list price was the same as it was the prior month. Fee simple actually increased a bit, but condos dropped. Now, this is the change year over year. It's just up slightly overall and among all property types. So going to what I was saying, in general, the DC market getting a little stronger towards the end of the year. Median sales price, actual expected seasonal declines from the prior months. Condos median sales price just about even from November. But if you look at the median sales price change from the prior year, it's up overall by 4.6%. Detached was just about even. Row homes were up by 5%. Condos, continuing what we're talking about, median sales price for condos was down year over year by 1.3%. Now we are going to close it out with the most recently reported week from MLS. This is the week that ended this past Sunday, January 19th. So most metrics are showing some strength compared to a week ago. But that's to be expected as we head further into the year. The market's generally softer than the same week last year, but we're seeing a slight bump in price. So we're seeing as we get further into January, the unofficial start of the real estate market for the year is we always say it's the Thursday after MLK Day, which is today. MLK Day was Monday. This is Thursday. So this is when we start to see things creep up, and you can see that in the data from a week ago. This is for Washington D.C. Metro. Taking a quick peek at North Central Virginia, we're seeing upward pricing pressure from last year and last week. We're seeing higher listings, both new listings and active listings over the prior year. Days on market are higher than last week and last year. So that closes out my session. Actually ended a little early. The lack of interaction and discussion. Save time just a bit. So we I have 15 more minutes available. I'm happy to answer any questions people have, or we can just call it a wrap a little bit early. And again, please, if you're joining from Facebook, LinkedIn, or Instagram, if you are commenting and I'm not able to see that, please DM me. I think that I'm only seeing comments from YouTube and want to make sure that I can respond to everyone's comments and reflect the, like I said, the collective wisdom of the group here. Play around with the view. Going once, going twice. Any questions, thoughts, comments, concerns? Thank you, Shelley. Thank you, Tommy. Thank you, Virginia. Thank you, Summer, Samantha. I do. I agree, Virginia. I think we are going to have. I think we're going to have a busier spring than we had last year. I think we're going to see kind of the continuing trend from the end of last year, the stronger winter heading into the spring. All of these deferred buyers and sellers not being able to wait any longer. It's not going to be like 2019, but most likely stronger than 2023. All right, we're going to go ahead and call it a wrap. Thank you all for joining. I hope you have a wonderful rest of your day and rest of your week. Oh, getting some direct messages from Chris Dixon joining on Instagram. He said he's seen lots of buyer activity at open houses and showings, but not as many offers in Virginia. So that's interesting. If anyone else is doing a lot of business in Virginia, does that match what you're seeing? I'm seeing this is kind of the opposite of what I talked about with the overall DMV numbers, where I was saying is that we were seeing kind of relative showing demand, relative showing activity somewhat constant from last year, but we were seeing more closed sales and a little more vibrancy in what buyers are actually doing. Whereas Chris commented that he's seen a little bit as far as on the ground, he's actually seeing more activity in showings and open houses, but less activity when it comes to submitting offers or getting under contract. Thank you, Chris, for sharing that. Okay, now we're going to call it a wrap. Once again, thank you all for joining. Have a great rest of your day and rest of your week. Take care.